What's going on, everyone? In this video, we're going to be doing the weekly recap of the stocked up trading floor. The market was definitely a little bit choppy and bearish this week as the S&P 500 sold off hard on Thursday, sending the S&P 500 lower, of course, but also breaking its higher low pattern that it was trying to establish. Heading into this week, not only will it be important because of the election and more big earnings releases, but also the FOMC interest rate decision that is set to happen on Thursday. So there's a lot going on in the market right now, and a lot of big events unfolding that will be pretty important throughout the rest of this year. So let's get right to it. We'll start out with the theta plays. There were three plays that expired this week. Two of them expired for max profit, where the one that got assigned was an OXY 50 strike put. Looking at OXY right now, the stock is right at a major support. Tensions are still hot in the Middle East. And as always, with any short put trade, they should only be done if you're fine owning that stock for the long term anyways. Looking at OXY right now, it is just below that 50 level between the premium received for the short put as well as the covered call optionality. The setup is looking pretty good. So looking at OXY, looks good overall. For those of you who don't already short put options, I very strongly recommend looking into it if you haven't already. Shorting put options is one of the best strategies out there because when you do it on a stock that you're otherwise happy to own at a strike price, you're otherwise happy to own that stock at, the setup becomes a big win. Basically, you sell the put option, get paid a premium for doing that. This is nice not only because time is constantly working for you, but the put option that you sell is theoretically a little bit more expensive than it should be. If the put option does get assigned into a share position of the stock, you could just hold that stock because you're otherwise happy to own it anyways, or you could sell covered calls against it to continue to collect even more premium. Whether you're doing this with CELH, Disney, OXY, or any other stock out there, the most important thing, as always, is to be only doing this with a stock that you are happy to own. When that condition is true and the strike price you are selling is a price you are happy to own that stock at, the whole strategy becomes a win-win-win because you are getting paid to buy a stock that you are otherwise happy to own at a price you are happy to own it at, and on top of that, you are receiving a premium to buy it and even sell it if you decide to sell covered calls. If you have not shorted puts already, I strongly recommend looking into it, and if you need help, feel free to tag Tom, Hunter, or myself in Discord, and we will definitely help you out. But shifting over into other parts of the recap, there were no new swings, but there were a handful of surge plays throughout the week. I would say Thursday was definitely the best day as there were coin puts that popped up by 389%, Uber puts that popped up by 197%, Boeing puts that popped up by 192%, and a lot of other action. As we could see on Thursday, some plays did very well, while others were duds. You could say the same thing on Friday and every other day throughout the week. But overall, we saw some pretty good moves this week in multiple different directions, especially as the election volatility is continuing to play out. As always, thank you all so much for watching, and let's have a great week in the stock market.